Welcome to the news. If you snooze, you lose. Binance has been sued by the SEC and it came with a lot of charges. In total, we have 13 charges against Binance. And this includes failure to register its Binance.com platform as an exchange or a broker-dealer clearing agency. Further, it claims Binance and BAM Trading, I think it's a Binance arm and trading arm, that's why it says Binance US legal entity, failed to register Binance USA as an exchange, broker and clearing agency. CZ was sued as a control person. So there's a lot of charges around here. So this came on the 5th of June against Binance. So the SEC, which is the United States Security and Exchange Commission, is suing Binance and named a host of cryptocurrencies as securities that Binance was trading on its platform. So Binance is one of the biggest exchanges that we have. So they have a United States arm, then they also have a Binance.com, which is open to the rest of the countries that they are registered in. So this particular suit was against the United States Binance, so the Binance US. So in addition, the suit claims that funds from Binance and Binance US were commingled. So if you understand this language, this seems related to the problem we had with the FTX Sam Bankman-Fried issue. So they are alleging that Binance is commingling funds between the two entities, that's the Binance and the Binance US. And this echoes complaints filed by the CFTC, that's the Commodity Futures Trading Commission, on the 27th of March, which CZ denied. So I had a little bit of look, and it seems this particular issue that the CFTC had has been answered by Binance, where they provided a 14-page letter diving into the exchange compliance history, recognizing previous mistakes and claiming the firm has built solid know your customer and anti-money laundering policies in the past years. So at least they responded to me. For now, even though I am not here to say CZ has been always right, but again, you tend to understand that where there is no regulatory clarity, then you tend to have issues like this. So speaking about regulatory clarity, one of the things that Binance was sued for was the trading of securities in those exchanges, and some of the securities that were listed included BNB, BUSD, Solano, ADA, Polygon, Falcon, Cosmos, and the rest of them. You can see them on here, Algorand. So the question is, what are really securities, and how else do we find out but by asking the chairman, Gary Gensler of the SEC?
How would you categorize Ether then?
Look, I think that the general sweep of what Congress did, not just in the 30s, but as amended.
I'm asking you, sitting in your chair now, to make an assessment under the laws as exist. Is Ether a commodity or a security?
Without speaking to any one.
I know you've repeatedly said you're not going to speak to one, except you've spoken to one, Bitcoin. So I'm asking you to speak to a second one, the second largest market cap here.
And speaking to the tokens, there's 10 to 12,000. If there's a group of entrepreneurs in the
I'm asking about one.
The public is anticipating a profit based on the.
I'm asking you a specific question, Chair Gensler. I said this in private. This should be no shock to you. I'm asking this question. Is Ether a commodity or a security?
And again, it depends on the facts and the law, and if there's a group of individuals.
I'm asking about the facts and the law sitting in your seat and the judgment you are making.
And so, Mr. Chair, I think you would not want me to prejudge because I'm also.
But you have prejudged on this. You've taken 50 enforcement actions. We're finding out as we go, as you file suit, as people get Wells notices on what is a security in your view, in your agency's view. I'm asking you a very simple question about the second largest digital asset. What is your view?
And my view is if there's a group of individuals in the middle that the public is
All right, so let me just ask a second question then. Do you think it serves the market for an object to be viewed by the commodities regulator as a commodity and the securities regulator to be viewed as a security? Do you think that provides safety and soundness for the product? Do you think it provides consumer protection? Do you think it serves the value of innovation? I think no should be a very simple answer for you here.
I think
that uncertainty is bad, is it not?
And I think that Congress has said that there's one agency, the Securities and Exchange Commission, under this committee.
And you won't answer my question, and you're the head of that agency. So give me a break. Come on.
I'm answering it in the generic because you would not want me to speak about any one set of facts and circumstance.
Okay, but you've already spoken. Have you said anything about Bitcoin?
So it is clear to see that Gary Gensler always ducks from answering this question. So how do you expect all these exchanges to know what to do? And SEC files a motion for restraining order on Binance. So the idea is to restrain the assets on the exchange itself to prevent any, removal of potential evidence that might be used during the proceedings. So in the statement here, it says the request action includes the freezing of assets of Binance.us and the repatriation of fiat and cryptocurrency held by US customers or for the benefits of the US customers. So this relief is necessary as an expedited basis to ensure the safety of customer assets and prevent the dissipation of available assets for any judgment, given the defendants years of violative conduct, disregards of the laws of the United States, evasion of regulatory oversight, and open questions about various financial transfers and the custody and control of the customer assets. This has already started having impact on Binance. Binance holds trading for some of its assets. So if you have a look, it's all listed here. So the pause affects over 90 trading pairs of the stablecoin Tether, 8 Bitcoin pairs, and 2 Binance USD pairs. According to Binance USA, deposit and withdrawal remains available. In a statement sent to Cointelegraph, a spokesperson to Tether suggested the decision could be a preemptive move to non-USDT tokens listed on the exchange that could be considered securities by the SEC. So again, I don't see them trying to make moves after the lawsuit itself. I don't know how laws work, but just the same way I'm reading it here, anybody else has access to the information, and they will clearly see that they started removing these assets once the lawsuit is already in place. So I don't really know how that will work in their favor. SEC struck again and sued Coinbase for breaking US securities rules. So Coinbase is another centralized exchange, a massive one, which has been operating solely in the United States, and it is actually an open traded company in the United States. So they have been sued as well for trading securities, and they have been sued for not registering. So the lawsuit further alleges that Coinbase has operated as an unregistered security broker since 2019, almost 2 years before its initial public offering in April 2021. And you can also have a look and see some of the cryptocurrencies that were listed as part of the securities that they offered on their platform as well. You can see the likes of Solana, ADA, Polygon, and Sandbox. But again, if we go ahead and ask the chair, Gary Gensler, the definition of securities, it is quite hard to get a definitive answer from him, again making it quite difficult for all these companies. And let's see what CZ has to say. He said, if you have to pick a fight with everyone, maybe you are the one at fault. And to be honest, well said. If you are picking a fight with everybody, maybe there is something wrong with you. And we can also see that within the regulations itself, the CFTC and the SEC are very conflicting in their information, and you can tell that the regulatory bodies that we are relying on are not even they're not even clear on how to approach the assets. And again, this is based on the complexity of the asset, and it's way different from what they are used to, which is why there is need to sit down and really look at the assets, bring in professionals, and decide on how to regulate these cryptocurrencies, which is what some countries like the EU are doing at the moment with the MiCA. However, this is not a news to Coinbase, as they have previously received a Wells notice from the SEC threatening to sue them. And normally, from the history of the SEC, if they send out a Wells notice to a company, they normally sue. But let's have a listen and hear what the CEO of Coinbase has to say.
In cases where it really wasn't clear what we should do because it was a new industry, we tried to do the right thing in the absence of clarity and demonstrate good faith effort that would allow us to bring this technology in a safe and thoughtful way to hopefully 1 billion people someday. So here we are as a public company. I think we've made enormous strides, and I think the message I'd really like to leave with the commissioners and the SEC is that we're committed to working within the regulatory perimeter. We want to see a clear market structure for trading crypto securities. Not all crypto assets are securities. There's also crypto commodities. There's stable coins. There's crypto that's artwork. We're going to work with multiple regulators to make this industry safe and trusted. And a Wells notice at this stage, when there is not a clear rule book, is not constructive, and it's not good for America. We are prepared to defend that position in court, but it doesn't have to come to that. We welcome a true dialogue about a workable path forward for our industry. Now I'll hand it back over to Paul.
Coinbase has been talking to the SEC about our business for many years now, including sharing our legal views on our asset listing and staking services. We have repeatedly asked the SEC for its own views on how securities laws might apply to Coinbase and our industry. And to be candid, we've mostly gotten silence in response. But we were very proud when 2 years ago, in April 2021, the SEC declared effective Coinbase's registration statement, allowing Coinbase shares to be sold to millions of retail investors. That moment came after months and months of review by the SEC. The SEC asked a lot of questions about our business and our services, which looks very much like the business we have today. And we answered those questions in detail. That included questions about our asset listing, our staking service, Coinbase Wallet, and all of the legal analysis we'd done related to those products. We understand that new technology can pose challenges for regulators. We understand new laws are sometimes needed. That is why Coinbase's core commitment to regulatory compliance has never wavered. We welcome new regulation, but we believe that regulation needs to be created in a fair way and shared with the public. I understand that the Wells notice means that the staff has reached a preliminary determination that aspects of our company's core business violate securities laws. So I want to be very direct with you. Coinbase does not list securities. We use a robust process based on SEC guidance to make sure that we don't list securities. We reject some 90% of the assets that we review. It might be better for our short-term business to be less conservative than we are, but that is not who we want to be as a company. That's why, as proud as we were when we became a U.S. public company just 2 years ago, we were just as disappointed to receive the Wells notice from the SEC a few weeks ago. In the past 2 years, Coinbase's business really has not changed in any.
Now, this doesn't seem to me like a company that is trying to duck regulations. Coinbase CEO responds to the SEC suit, says team is confident in facts and laws, and in one of the interviews he had after the lawsuit, he was asked questions about their finances and how well they will if they think they can really handle the lawsuit financially.
Will you fight this all the way to the Supreme Court? Do you think you'll have to, and do you have the financial resources to do that?
Yeah, so even if this takes some time, that's okay. So in Q1, we were adjusted EBITDA positive as a company, even in the depths of this crypto bear market, if you want to call it that. We have over $5 billion on the balance sheet.
Now you have Coinbase, which has a lot of money in reserve. You have Binance. Binance has a lot of money in reserve. And you have the XRP, and you have all the companies involved. I think this is, bringing all the cryptocurrency companies together to fight the regulations in the United States. And again, what they are asking for is just clarity. Again, I could also remember after the Wells notice, I think the Coinbase company sued the SEC, but the lawsuit was trying to push them to produce the laws that guide all these securities and commodities to make it clear in the public. And the response from the SEC was that it's a very complex whatever, and therefore they shouldn't be pushed within a time limit to get it done. So very complex and funny answer, but again, from the interactions from all the companies with the SEC, it does seem like there has been lack of clarity given to these companies. Again, this is why I don't really blame the companies in any way, shape or form. In one of Brian Armstrong's tweets, he said, "The SEC reviewed our business and allowed us to become a public company in 2021. There is no path to come in and register. We tried repeatedly, so we don't list securities. We reject the vast majority of assets we review. The SEC and CFTC has made conflicting statements and don't even agree on what is a security and what is a commodity. This is why the US Congress is introducing a new legislation to fix the situation, and the rest of the world is moving to put clear rules in place to support this technology." So obviously he's referring to the other countries putting structures in place to reflect the nature of the cryptocurrency industry. And on the other side, the SEC is trying to basically shut it down. So whilst this is happening, the Congress he's referring to was happening on the same day the SEC sued Coinbase. And
now, some may recall that the original decision to greenlight Bitcoin futures sparked controversy. There were calls to stop their launch. Yet my team knew that blocking these new futures products would not stop the rise of Bitcoin or other virtual currencies. It would only deprive Americans of smart regulation. Doing nothing would have been irresponsible. At that February 2018 Senate hearing, I spoke about a new generation's interest in crypto. I explained that the energy and momentum behind digital assets was not just driven by technological efficiencies and benefits. There was something else going on, something generational and cultural and social and human. And I told the Senate that we owe it to this new generation to respect their enthusiasm about digital assets with a thoughtful and balanced response, not a dismissive one. And here we are today, 5 years later, still seeking that thoughtful and balanced response from Congress.
My name is Paul Graywall, and I'm the Chief Legal Officer at Coinbase. It's disappointing, but not surprising, that the SEC has decided to bring legal action against Coinbase today, the day of our testimony before this committee's critical hearing on creating a workable framework for digital asset regulation.
My name is Dan Gallagher, and I'm the Chief Legal, Compliance, and Corporate Affairs Officer at Robinhood Markets. I've worked in the financial services industry for over 25 years and served as a Commissioner of the United States Securities and Exchange Commission and as Deputy Director of the SEC's Division of Trading and Markets.
So after each hearing, I try to take just a few seconds to ask myself what major themes appeared out of that hearing. First off, there is uncertainty surrounding the transition of digital assets from security to commodity, and that uncertainty injures innovation and market activity in this country. That's number one. Number two, that we are in need of a spot market regulator in the digital asset space. Number three, that the discussion draft makes important and serious advancements in closing both of those gaps.
So this really identifies that there is a gap in the regulations as it is, which is why this Congress is being done, inviting very, top leaders in the cryptocurrency industry, including the likes of Robinhood, Coinbase, Polygon was there as well. So this is how to create a path to a good cryptocurrency regulations to prevent clean off the asset itself. But again, on the other side, we have...
And there's a lot of debate as to the use cases and whether there's any there. Look, we don't need more digital currency. We already have digital currency. It's called the US dollar. It's called the euro. It's called the yen. They're all digital right now. We already have digital investments.
So the fiat system is basically what he's trying to protect. And that is the summary of Gary Gensler. So let's have a look and see how all this is affecting the market. This is a 7-day chart for BTC. You can see on the 5th of the lawsuit, BTC went down to about 25.5, 25.7, lowest probably 25.4, and it went back to almost where it was and continued trading sideways. So if you zoom out a little bit on the one month, you can see that BTC has been trading sideways for a month. So in summary, we can say that it didn't really have much effect on the market itself, and some people will say that the market has bottomed at this point, considering such a heavy allegation on two of the biggest exchanges out there, and it had little to no effect on the market. This means that nobody participating in the market at this point is willing to sell. And that's it from me today. Please share, like, and subscribe, and I'll see you on the next one. Peace.